Watch video 8 on Chapter 2, Concept and Role of a Mutual Fund from the Workbook for NISM Series VA, Mutual Fund Distributors Certification Examination, and review the multiple choice questions and answers. 1. What is issued to an investor when they invest in a mutual fund scheme? A. Bonds. B. Certificates. C. Units. D. Stocks. Answer: C. Units. 2. What is the typical face value of a mutual fund unit? A. 100 rupees. B. 50 rupees. C. 20 rupees. D. 10 rupees. Answer: D. 10 rupees. 3. What does the unit capital of a scheme represent? A. The number of units issued multiplied by their NAV. B. The number of units issued multiplied by their face value. C. The total dividends paid by the scheme. D. The total amount of interest earned. Answer: B. The number of units issued multiplied by their face value. 4. What are recurring expenses in mutual funds? A. One-time fees charged to investors. B. Expenses incurred to manage the scheme. C. Penalties for early withdrawal. D. Taxes paid on the income generated. Answer: B. Expenses incurred to manage the scheme. 5. How do recurring expenses affect the NAV of a mutual fund scheme? A. They increase the NAV. B. They do not affect the NAV. C. They lower the NAV. D. They are added to the NAV. Answer: C. They lower the NAV. 6. What has SEBI done to regulate recurring expenses in mutual funds? A. Allowed unlimited expenses. B. Imposed limits on expenses. C. Banned all expenses. D. Made expenses optional for investors. Answer: B. Imposed limits on expenses. 7. What does NAV stand for in mutual funds? A. Net asset value. B. Nominal asset value. C. Notional account value. D. Net annual value. Answer: A. Net asset value. 8. What does a rise in the NAV of a mutual fund indicate? A. Losses in the investment portfolio. B. Profits in the investment portfolio. C. No change in the portfolio. D. Increase in management fees. Answer: B. Profits in the investment portfolio. 9. What does the AUM of a mutual fund scheme represent? A. The total number of units sold. B. The total amount of recurring expenses. C. The size of the mutual fund scheme based on investments. D. The total dividends distributed by the scheme. Answer: C. The size of the mutual fund scheme based on investments. 10. What happens to AUM when a mutual fund scheme performs well? A. It decreases. B. It remains constant. C. It increases. D. It fluctuates. Answer: C. It increases. 11. What is the process of valuing securities in a mutual fund portfolio at their current market value called? A. Dividend distribution. B. Face value calculation. C. Mark to market, MTM. D. Asset realization. Answer: C. Mark to market, MTM. 12. What is the advantage of professional management in mutual funds? A. Guaranteed returns. B. Simplification of the investment process. C. No management fees. D. Direct stock trading. Answer: B. Simplification of the investment process. 13. How is diversification achieved in mutual funds? A. By investing only in bonds. B. By holding various types of securities in the investment portfolio. C. By focusing on one sector. D. By investing in only large-cap stocks. Answer: B. By holding various types of securities in the investment portfolio. 14. What is the primary benefit of diversification in mutual funds? A. It guarantees returns. B. It reduces risk. C. It increases management fees. D. It eliminates taxes. Answer: B. It reduces risk. 15. What advantage does economies of scale provide to mutual fund investors? A. Reduced transaction costs and better terms with brokers. B. Higher risk exposure. C. Higher recurring expenses. D. Less regulatory oversight. Answer: A. Reduced transaction costs and better terms with brokers. 16. What are IDCW options in mutual funds previously known as? A. Systematic investment plan, SIP. B. Dividend options. C. Capital withdrawal plans. D. Growth options. Answer, B. Dividend options. 17. What is the purpose of the mark-to-market valuation in mutual funds? A. To fix a constant NAV for the scheme. B. To calculate the daily NAV of the mutual fund scheme. C. To eliminate market fluctuations. D. To guarantee investor returns. Answer, B. To calculate the daily NAV of the mutual fund scheme. 18. How do mutual funds enhance liquidity for investors? A. By allowing instant withdrawals anytime. B. By enabling investors to sell units back to the mutual fund or via stock exchanges. C. By keeping funds locked for long periods. D. By providing fixed interest payouts. Answer, B. By enabling investors to sell units back to the mutual fund or via stock exchanges. 19. What happens if there is a material development related to a mutual fund's investments? A. The information is withheld for investor protection. B. The information is made available to investors. C. The fund is liquidated immediately. D. SEBI takes control of the fund. Answer, B. The information is made available to investors. 20. What is one of the tax-related benefits of investing in mutual funds? A. Tax on income is paid immediately. B. Mutual funds pay taxes on behalf of investors. C. Investors can defer tax liability. D. No taxes are paid on mutual fund investments. Answer, C. Investors can defer tax liability. 21. What benefit do equity-linked savings schemes, ELSS, provide under Section 80C? A. They guarantee returns. B. They reduce the tax liability by allowing deductions. C. They offer fixed interest rates. D. They are free of any risk. Answer, B. They reduce the tax liability by allowing deductions. 22. What option does a systematic investment plan, SIP, offer to investors? A. The ability to withdraw all money at once. B. Regular investment of fixed amounts over time. C. Direct stock trading access. D. One-time bulk investment. Answer, B. Regular investment of fixed amounts over time. 23. How do mutual funds provide transparency to investors? A. By withholding information until the scheme matures. B. By providing regular updates through scheme-related documents, NAV, and portfolio disclosures. C. By charging extra fees for information access. D. By offering only annual statements. Answer, B. By providing regular updates through scheme-related documents, NAV, and portfolio disclosures. 24. What is one way mutual funds offer convenience to investors? A. By eliminating all documentation. B. By allowing systematic transactions like SIP, SWP, and STP. C. By charging high entry and exit loads. D. By providing no flexibility in investment structure. Answer, B. By allowing systematic transactions like SIP, SWP, and STP. 25. What protection does SEBI provide to mutual fund investors? A guarantee against losses. B. Strict checks and balances on mutual funds and their activities. C. Exemption from taxes. D. Free investment advice. Answer, B. Strict checks and balances on mutual funds and their activities. 26. What is the advantage of tax deferral in mutual funds? A. The investor never has to pay taxes. B. The investor can accumulate wealth faster. C. The investor gets a higher NAV. The mutual fund pays taxes on behalf of the investor. Answer, B. The investor can accumulate wealth faster. 27. What is the purpose of the Scheme Information Document, SID? A. To provide daily market updates. B. To disclose detailed information about the mutual fund scheme. C. To give investment advice. D. To list stock exchange prices. Answer, B. To disclose detailed information about the mutual fund scheme. 28. What is the role of a systematic transfer plan, STP? A. To transfer funds between different types of mutual fund schemes. B. To withdraw funds regularly. C. To lock funds for a fixed duration. D. To invest in only one mutual fund scheme. Answer: A. To transfer funds between different types of mutual fund schemes. 29. What does liquidity in mutual funds refer to? A. The ability to recover the market value of investments. B. The guarantee of fixed returns. C. The lock-in period of a scheme. D. The tax benefits available. Answer: A. The ability to recover the market value of investments. 30. How do mutual funds benefit small investors? A. By offering free brokerage accounts. B. By enabling them to diversify investments at a low cost. C. By giving high interest on fixed deposits. D. By providing risk-free returns. Answer: B. By enabling them to diversify investments at a low cost.